How's it going, everybody? So, welcome to the new weekly outlook. As always, let's go through some fundamentals first and then move on to the technical analysis with Stefanos.
Yep, looking forward to it. Hope you guys had a great weekend. Let's jump into the week and get some nice trades going. We took a couple nice ones this morning on GJ. There was a couple nice moves as well. So I'll break those down and Sharma will kick us off.
Perfect. So, first, I want to go over last week, specifically the interest rates, and then we'll go ahead and move on to some of the articles that we have. So, starting off with the US, so the Federal Reserve increased their interest rates by 75 basis point hikes. We were expecting 75 basis point hikes ever since the week before that. CPI came out and we saw that inflation was starting to increase, right? We were expecting a decrease, but rather we saw an increase in inflation. And then during the press conference, Powell also kind of made the statement, whether it was like a slip out or whatever it was. But if you look at the entire press conference, he was trying to really push this narrative of we're going to continue to increase interest rates, but inflation, we're starting to get that under control. And then he also was talking about how there's a strong labor market and how there is, a very strong economy so far that would support these interest rate hikes. So in between there, when he was asked a question, he ended up saying the opposite of the narrative that he was pushing out. And that was that he said we are going to continue to see inflation increasing even going into next year and maybe even potentially further out. So that is pretty much where you're starting to get a bit more of a real picture of what's going on into the economy. We already know what's really happening in the economy. If you've been watching the weekly outlooks here and the fundamentals that we have been talking about, you understand that this narrative right there that a lot of these central bank officials were trying to push out since the beginning of the year is more of just optimism to prolong this market fear. But when you look at the actual data that's coming out, when you're looking at the unemployment, when you're looking at, the companies that are laying off thousands and millions of people at pretty much at this point, and they're still laying off people, you do not have a strong labor market, right? And there are still a lot of people who are unemployed, or rather, or what they call it now is like quiet quitting. So a lot of these people, they've been offered packages, for example, so they're not quote unquote really unemployed. Even people, for example, who have been let go and it was really not their fault, they're really the only ones who are considered unemployed. But if you just walk out, then they're not really counting that, right? So there's a lot of factors, a lot of I guess you could say the right word would be at this point manipulation of a lot of the data that we're seeing. But when you look at the micro level, you start to understand that the narrative they were pushing is not true at all. And so when he made that statement, that was a true picture of the economy. Inflation is increasing, and we saw that with CPI data the week before that, where we were starting to expect inflation decreasing, but we got an increase instead. So we're seeing those interest rates increasing. They're targeting around like a 4.5 going into mid of next year, but they would need to see those further hikes happening, right? That 4.5, really, that's not going to calm down inflation whatsoever. Inflation currently is sitting at above 8%. When you look at how do you control inflation using interest rates, you need to get the interest rates, closer to that percentage, closer to 8%. Maybe even going into next year or even after that, we would see aggressive hikes, maybe even going above that 4.5% that they're talking about, right? Getting closer to 5%. And that's when you would really see inflation now starting to calm down. That's really historically, when you look at economics, that's how it works, right? So just looking at a 4.5% increase, that's not really going to do anything to this 8%, above 8% inflation. So that is, the sentiment that was pretty much being put out by this FOMC press conference. Then going into Bank of Japan, they maintained the negative interest rates. That's what they have been saying for the longest time. And they said while everybody else was increasing interest rates, that they were still going to maintain these negative interest rates and they were going to maintain their accommodative monetary policies. This is, again, inflation being created by a central bank at this point, right? And then you continue down into GBP. So when those interest rates came out, same thing. We got another 75 basis point hike there. And again, same exact sentiment as any other central bank besides a Bank of Japan. Inflation is the way that they're going to control, or recession is the way that they're going to control inflation. And that is necessary to control inflation. But Bank of England's governor even came out, in the last couple of times, and he said that there is going to be a long recession. He said, that's what the true picture of the economy is. There's really no false hope that was being put out there. And then European Central Bank essentially started doing the same exact thing. And that's going to be very interesting when we start moving into the articles, because you'll start to see the sentiment shift there, the narrative that's starting to switch there. So with all of that in mind, let's take a look at some of the articles that we have. So starting off with, some of the FOMC members who will be speaking this week, we started off with Fed's Mester. So as you continue down, she pretty much pushes the same exact sentiment that we need further interest rate increases to really control this high inflation that we have. And we're going to have to keep these restrictive monetary policies, and we're going to have to keep some of these contractionary monetary policies, and maybe even be more aggressive with it. So when you're looking at the Fed specifically, when you're looking at the US dollar, when you're looking at the US in general, what we have to understand is the Fed is being quite aggressive with their monetary policies. They're moving into quantitative tightening, and they're increasing interest rates. But when you look at the other hand of what is the government essentially doing, they're pushing out all these policies. When you look at specific states, for example, they're giving out inflation stimulus checks, right? Free money to people to quote unquote deal with this inflation. All you're really doing is you're adding to the inflation. So yes, the government is independent from the Fed, and the Fed is independent from the government, but really what the FOMC ends up doing is cleaning up after whatever the government is doing. So from their policies, from their laws, what they're doing is putting more money out into the economy. The FOMC looks at that and they're like, okay, well, we need to adjust our monetary policies. So that means we need to be a lot more aggressive. So there's a lot of cleanup work that's essentially being done here. Versus when you look at the UK, the government there, they just went through an election that just had, they elected a new person to come in. What they're going through is quite different, or the opposite of the US, in the sense that their government understands that we need to be restrictive, right? And they're doing some of the similar things. Again, obviously, you need to keep the confidence of the consumers and the citizens and everything like that if you want to stay in the office. But they understand that the central bank and the government need to work together to kind of combat this inflation. So when you're looking at the US and when you're looking at other, central banks, you need to understand that they're essentially doing a lot of the same stuff. But in order for this to work, in the long term, you need the government and the central bank to push similar narratives together.
Yep.
And so as you continue down here, so a lot of these FOMC members, or the Fed members, are going to say the same exact thing going into the rest of the week, which is continue to increase those interest rates, and we're going to need even higher interest rates to combat this inflation. That's really where the true picture is, and that's where really the economic outlook is. When you look at Bank of England, we start to see some more of this fear settling in. With the US, it was the same exact thing. If we continue to increase interest rates and be aggressive with it, the sentiment is there is going to be a recession. And same thing with Bank of England, same thing with ECB, same thing with any other central bank that you're looking at that continues to increase their interest rates. So Bank of England here, for example, along with the UK Treasury, failed in a joint bid to calm financial markets because they continue to increase those interest rates. And now the investors are starting to price in the fact that there is going to be a recession, right? There's already some of this market fear that's settling in. A lot of these investors are moving from this risk-on sentiment that we saw in the last 2 years, now moving into a more of a risk-off sentiment. You're seeing that with the weakening equities. You're seeing that with more of the market fear that's coming into the financial markets here. You're starting to see a lot of these risk currencies losing strength, where you're seeing the euro coming back down, almost hitting a parity with the dollar, and also the same thing with the pound, almost hitting the parity with the dollar. There's a lot of fear that's coming in now, right, into the markets. And obviously, in order to combat all of that, now we had, for example, Bank of Japan that was intervening into their markets, and that's what the UK here is essentially getting ready to do. So the UK would have to launch a stronger intervention, possibly including emergency rate hikes. So that would be one way to intervene, right? And pretty much that's how you would try to bring in some more investor optimism. But obviously, when Bank of Japan did that and they started with their unlimited bond purchasing program, the reason why that started was to show a bit more confidence into the yen. That obviously did not work out. Investors saw right through it. And that's the same exact thing what's essentially going to be happening here with some of these risk currencies as well. And so again, moving into this risk off sentiment. And then before I move on to this article, I want to go over, we had ECB president speaking today, and she's pretty much saying the same exact thing. So if you just go onto Forex Factor and click on latest release, you'll come right to this article or this website here. So here they're expecting the same thing, where they set the same thing as the Fed, where they said strong consumer spending, right? Or like a strong economy, this and that. And now they're starting to switch this narrative where they're saying that we expect activity to slow substantially in the coming quarters, right? And what are the reasons for that? Because of the high inflation. Obviously, high inflation is dampening spending and production. And it's not just that, it's also because of increasing those interest rates and setting them at high levels. That's what the purpose of high interest rates is. When you increase interest rates, essentially what you're trying to do is demotivate people to spend money on credit. You don't want consumers spending money on credit. You don't want businesses spending money on credit. You want to make, money even more expensive. You want to contract that money supply into an economy. That's what the interest rate does. So, obviously right now what they're doing is trying to blame that on the high inflation. And then continuing down, the strong demand for services that came with the reopening of the economy is losing steam. They also have issues in general with, the energy prices and everything like that, because they've been cut off from the Russian supplies, right? Which was like 40% of their economy. That's 40% of their economy was getting the supplies from Russia. And then the third thing is the weakening in global demand in context to tighter monetary policies. And then also when you continue down, the fourth one that they're talking about is uncertainty remains high as reflected in falling household and business confidence, which again is coming from all the things that they're dealing with in the Eurozone in general. And then the last article to go over is going to be an example of this risk-off sentiment that I was just discussing. You're going to see the same exact thing happening in the US as well. It's happening at a very, very low scale at the moment. But here in the UK, for example, because Bank of England said that they're going to continue to increase interest rates, you're starting to see lenders withdrawing mortgage deals as concerns that it's going to continue to rise. And now the reason why there's fear around that is, will people be able to afford those mortgages? Will people be able to make those payments? Are you going to see the people just defaulting on a lot of the loans, right? Even mortgages in general. You will see when you look up just mortgage rates, you start to see a little bit of a decline there as well. This is just happening in the UK, but this article here, but you see the same exact thing happening in the entire Euro area. Any other cities, globally, that they saw a huge spike in the last 2 years in their real estate, they're all starting to correct right back down, right? And now this is starting to spiral into the US, where you're starting to see that happening little by little. The reason why that's important, the reason why I'm even mentioning real estate here, is because for any country, real estate tends to be that one sector of the economy where people want to go and park their money, and that's more of like a wealth generation sector, right? That's where you start generating wealth, and that's why it tends to be one of the last sectors that takes a hit. But once it does take a hit, that tells you by that point that the entire economy is pretty much going through an entire corrective phase. So a lot has happened in order for that ripple effect to get to the real estate sector, and then you start to see corrective moves there, and that's when it starts to get a little bit more worse before you can see any sort of correction or any sort of recovery. And then let's go over the economic calendar, and then we'll go ahead and move on to technical analysis. I know that was a ton of information, so some people may even need to watch it a couple of times.
You're good. No, people want that. Even if they don't understand it, they can always look things up and ask us questions as well. So just keep giving it.
So this week we have, couple of data coming out, high impact news, but mostly it's going to be, some speeches that are going to be more of the highlight until you get into the PCE price index coming out later this week. So we started off with the Italian parliamentary election, and then you had Bank of Japan's governor speaking. Going into today, we have the ECB president speaking as well. Then you had FOMC members, you had the MPC members, and then we had another FOMC member speaking here again. Going into tomorrow. So today was pretty much like all speeches, right? Giving you an understanding of this economic outlook. Now going into tomorrow, we have Powell speaking, and I expect whatever he's talking about essentially to start getting priced in right at New York Stock Exchange open. So he's going to be talking about digital currencies and everything like that. But even that's going to set out some understanding of what's the economic outlook going to look like. in order for, and I was having this discussion with another student today, where we were talking about these digital currencies, cryptocurrencies, and everything like that. But essentially, what you're going through is more like this economic shift, I guess you could call it, where there obviously a lot of these central banks are working on digital currencies, launching their own digital currencies. That's why you're starting to see them double down on a lot of the cryptocurrencies as well, right? Those lawsuits, regulations, and everything like that kicking in. But also, in order for you to switch onto another currency or push that type of currency onto the consumers, you need to back that up by a stronger asset, which in this case, in order for them to make that transition into, let's say, a US digital currency, would have to be a strong US dollar. And this strength in the US dollar only makes that much easier for people to adopt to a digital currency. I'm not saying this is going to come out in the next month or even by the end of the year, but this is something to look forward to because this is something that's happening in the background. So, start looking into stuff like that. Some of the resources would obviously be like the IMF looking into that. They have a lot of articles on this stuff and also a lot of research that's been done, and the central banks individually as well. And then after that, right when New York opens up, we got some durable good orders coming out. This should give you an understanding of what's happening from the manufacturer side. So if they're not getting new orders, then obviously that tells you, work back into the cycle. They get their orders from the retailers, and the retailers are obviously going to put in more orders if they're able to get high sales. If you start to see this dropping down, then understand that the consumers are already being super conservative. Businesses are already losing money, and that's why they're not able to put in more orders. Obviously, you're only going to put in orders when you've already sold all your inventory, right? And then continuing down, later tomorrow, we also have the consumer confidence with some like FOMC members speaking, but I think this is going to be more of the highlight after Powell speaking when it comes to, a New York session, if you're trading, when it comes to the volume around this time. We tend to see a lot of volume around this time anyways, between New York Stock Exchange open and then going up until 11 a.m. Eastern time when London closes out as well. And then going into Wednesday, it's more of a low impact day, slow day. So you do have an ECB president speaking right when London opens up. After that, it's quite easy going into another FOMC member speaking and then also Powell speaking in New York session. So here, he's going to be talking to the Community Banking Research Conference in there. And then you have the FOMC member speaking as well for the same exact thing. Continue down into Thursday, you got some GDP data coming out from Canada and then final GDP coming out. This usually doesn't make a huge impact into the markets. It's usually the prelim and then also the advanced GDP, final, not so much. And then you have unemployment claims coming out. The big day is really on Friday when core PCE price index comes out. That's the reason for that is because in the press conference last week, Powell said that this was pretty much going to be the numbers that they would be using to understand what's really happening with inflation and how aggressive can they really be to target that 4.5% going into next year. And then, of course, you have revised consumer sentiment, inflation expectations. So you do have a ton of low impact news coming out. But this week, you want to be very careful when you're in the markets. It's one of those weeks where it's very easy to get faked out, when you're using the 15-minute, 30-minute, things like that. So keep the eye really or the focus on some of the higher time frames. Of course, scalp off the 15 or 30-minute time frames when there's high volume. But when you're looking to hold on to a trade and you need to understand what's the limitation of your trade, use the higher time frames, because last 2 weeks, 3 weeks even, we've had so much volume into the market. Obviously, there needs to be some sort of corrective moves before we can continue.
Yeah, absolutely. One thing that will help right off the bat is just wait for candles to close. Like obviously wait for your setups, but just wait for candles to close above or below certain levels or close a strong candle either way, going bullish or bearish. But just be patient, right? And I think that's what you were trying to get at.
Absolutely. All right, go for it.
All right, let's take a look at the technicals. So looking over here at GJ, as you guys know, I like having my key levels marked off over here. I got 168.715. You got that previous wick, the yearly high up here. You got 166, that level we keep rejecting. You got 158, which has served as a nice support and resistance here to the left. And you got 156. I think that's 156. Nope, 156 now officially. We ended up getting that close below 156, and as you guys know, 156 is that level we've been trying to get up to back in 2020. It took about a year to get up to that, maybe even a year and a half. So 156 I have marked off over here, and the fact that we closed below it over here to end last week. The next candle ended up pretty much passing the low right away. The market opened here on Sunday, coming all the way back down to 149 and then snapping right back and flipping bullish, creating this top wick over here. Then we flip bearish today, and now we're kind of like a doji bullish candle here on the weekly. So, after a move like this, typically if you see this on some of the lower time frames, the fact that we got this rejection down here and price ends up pushing all the way down, all the way back up that way, and then right back down, and now we're right back around that area. So we've had that much volume in the candle already. How much farther can it go? Right? I could see us consolidating kind of below 156 over here, unless we get something crazy going on, throughout the week. But anywhere between 158 and maybe 154, I could see price end up closing, right? Whether it's bearish or bullish. But right now, it's a very weak bullish candle. What's going to happen over here in the daily? Let's see how the daily closed. So you actually ended up getting that snapback, and the daily finally closed bearish again, passed the low right away, came all the way down to 149. We come up, and then we end up closing bearish. Current daily candle is a very weak candle, by the way. This one already created its bottom wick. We're now flipping bullish over here. So where could we be going from here? Could we be possibly retesting? We've had this bullish trend over here, respecting and tapping multiple times, so we know it's valid. We've been having this bullish uh uh channel, whatever you want to call it. I don't know why I just blanked out on that, but price could be coming back up into that area, like 158 over here. But also meeting up with this trend line after breaking and closing below. We could be meeting up in this area, kind of consolidating around here as well, right in this range, right above 156. And then we possibly could continue back down and retest that low. But we need a strong Japanese yen to continue pushing us down. This whole move over here was basically due to the Great Britain pound. I think they're not in a very nice spot right now when it comes to their economy. Because if you look at GU, GCAD, all these pairs basically look exactly the same over here. So we know it was the pound moving. So looking at the 4-hour, now we're holding this higher low over here. We had a nice resistance formed. Change that real quick. We had a nice resistance formed right above 156. We've kind of been consolidating. Again, you got our key levels here, 156, 154. But our main things that we want to pay attention to are the more recent support and resistance. Right now, we formed a nice resistance here. Can we respect it and possibly consolidate and then continue down? Or are we going to break through that area? But we're also holding in support right down here as well with a strong bullish, kind of a strong bullish candle here on the 4-hour. It's only strong because it's the 4-hour. Next one created a bottom wick and passed the high of that candle already, and now we're continuing up. Looking at the 1-hour, right over here, here was our resistance right up here. This morning I had this marked off a little bit differently, and then we got sort of like a fake out over here of 156 and continued down. And this was basically the sell I was able to grab back down to the support. And I recently just closed somewhere around here, closing the full thing, knowing we were holding this higher low here. But right now we're kind of like sitting in this range right now. I want to see the 30-minute. Yeah. 30-minute, you have this whole area over here holding a support. You have this previous resistance. It should be nice and simple for you guys. You have this previous support, resistance, and resistance over here. We get a nice close above that area right here on the 30-minute. 8 o'clock just opened up. So can we get some kind of a pullback coming in, respect this support, and then continue right back up to retest the high? We got plenty of volume in these candles and plenty of volume in the market right now for this to be a big enough range. It's huge. It's about a 200 pip range over here on the 30-minute, right? So ton of volume in the market right now. What I want to do is wait for that retest to continue back up. Now, if price ends up faking it out over here, this should be interesting for price to continue down. What I would want to see is maybe close right back here. We get that lower high formed, retesting the previous resistance, and then price continues down. I think you're gonna have safe sells. I mean, if you're more experienced, you can execute on that fake out. I'd be more safe in this whole area as a whole. just this whole range right here, I'd be a little bit more safe, or at least right in here. I'd probably stay out of that for the most part. And then once you break support, you got this whole move to the left over here that you could take price right back down. But again, revisiting after you guys do a breakdown all the way down to the 30-minute, go back up to the 4 hour of the daily again just to take another look. And you'll see, okay, we're really holding a strong higher low. We could be continuing right back up to that area. And it's probably more likely than breaking support over here anytime soon and continuing down. But again, we could get that double top up here, respect the resistance, and eventually continue down within the next day or two. But looking at GJ or gold now. Oh, here we go. Go up to the monthly. So the monthly, same story. I have a lot of these historical levels marked off. Since the Russia-Ukraine conflict, we've been in this bearish trend over here, printing the lower highs, lower lows, and basically respecting the previous highs of the previous price action. But we ended up getting a nice break of 1680, and you got a clean move coming down into this area. I'm going to mark off a few levels like I did this morning. One of them being 1600 psychological level. You also get that little resistance right there that we kept rejecting. But you also have this support right over here that price could be coming down into. It's around like 17 or 1575, I'd say. 1575. Right there. And then I'll also just mark off, I'm not going to come down here for a while, but 1520. Actually, you never know. It very well could. But right now, these are some of the levels I'm marking off here on the monthly, just to keep an eye on. Can we continue pushing down in September all the way back down to this 1600 level?
Yep. And just to clarify, the monthly, it's when Stefanos said like the Russia-Ukraine war, we mean that it's been priced in. The market has priced that in. We didn't really see, like in general in fundamentals, we didn't really see anything different than them just kind of just going at each other, right? And then
Yes.
from that, after the market priced that in, we started seeing those interest rate hikes. We started seeing, can we eventually see a slowdown in inflation and all that fundamentals coming out? And that's what really caused, gold to come right back down.
Absolutely. Yeah, that was the main thing. You got obviously a lot of profit taking up at the previous highs up here from COVID. And then you also got the Fed getting really hawkish and then increasing rates, which pushed us all the way back down. So that was pretty much priced in since the beginning of February, I would say.
Yep.
So now looking at the weekly over here, again, we got another weekly candle last week closing below 1680 over here. We got this top wick formed. We actually got a very strong candle close pretty much below that area, as you got plenty of wicks below that area as well, but we rejected multiple times. We actually got the close here on this candle, right? Next one comes up, retest that whole range between 1680 and 1700. We flip bearish and continue down to fill that wick, close a very strong candle. We already have a wick on this current weekly candle and already passed the low. So could we be coming into what looks like a little support right in here that I'm going to mark off? That price ended up holding and pushing right through, to break the high of that candle, continue up. I love this setup, by the way. I think I tell you guys this all the time, but if you take this on lower time frames, this is money almost every time. But looking over here at the daily now, all right, so we broke that consolidation that we were actually talking about last week that we said would happen, where we would end up breaking 1680 and then consolidating for a little bit right below it. Right, so we ended up getting clean price action. This is no trade range. Get the clean close below. Top wick formed already, past the low of the previous, and we ended up closing a strong bearish candle. This one has no bottom wick. This one barely has a bottom wick. So could we be creating a top wick to continue down, or are we just going to hold support right over here and get this pullback coming up into this area and then continuing down? 4 hour. What we're looking at here is a nice resistance formed. Ended up rejecting this morning multiple times. I didn't take this trade because I already took two this morning, but this was a great trade. I journaled on the lower time frames over here on gold that you could have caught this from up here and taken it down, ridden it down to retest the low here. But the first sign is get this bearish candle closing at 9 a.m. This was a 4-hour candle close. So 5 o'clock candle, closed at 9 a.m., closed like a doji candle, bearish though. This one respected the high. Actually, no, it didn't respect the high, but it grabbed liquidity in this area and ended up flipping bearish and filling that wick, continuing down. But you could see the entry on the lower time frames. So right now, as you can see, this is what I was looking at. You got multiple rejections of that resistance right here, and then here. Once you get this 1-hour candle close bearish, you can anticipate price continuing right back down, possibly. You just got to worry about certain levels here to the left that you got to break through.
Absolutely.
Right now, looking at the current price action, yeah, this previous support here, we ended up breaking below, retesting it, rejecting it, and continuing down, but we failed to, right? We came right back up and kind of consolidated around this area right here. And I could probably adjust this level over here down below support. We'll see what our actual target will be. But right now, price is starting to come back into this range up here. Are we going to get like a further pullback up into here before continuing down? Let's see the 30-minute. Okay, 30-minute. This might be an opportunity for a trade tonight. I would really just want to wait for a close above. You're trading against the trend. Wait for the closes here on the 30-minute or maybe the 15-minute. 15-minute is showing a little bullish pressure over here. But again, you don't want a weak bullish close on the 15-minute. You want at least a very strong candle close and maybe just wait for the retest to continue up. But get a fairly clean move to the left. Over here as well, this whole zone. I'll make it green for you to color coordinate.
I think we're in a very key level, even when you're looking at, the daily time frame and the weekly time frame specifically. And then if we can continue breaking out of this, let's say like around 1630, then I think we're gonna have that volume to continue pushing back up.
Okay, I like that. Yeah, I mean, you may need to. I would probably wait for the retest here, or at least the bottom wick rejection, because you have this area right here where you have that wick and then the resistance right there. But above that, you got cleaner moves to the left. But
Yeah,
if you get the retest right in here and price holds support, I think we could very well push through here. But again, you would want that support being formed on the 30-minute.
absolutely.
This looks like a nice setup right here.
That's
Nice strong close. We didn't close above this resistance just yet. You can always mark it like this actually. And you got a strong close. Once this candle creates a bottom wick passes the high, you should at least grab the move coming up into this resistance. But if you didn't get that yet, just wait for the pullback and then take that up.
Yeah. So that's the same level on top of the wick that I have marked off as well. But if you can hop up to the weekly real quick.
Sure.
And then look to the left. So we want to zoom out and then, yeah, kind of look to the left. So if
Right
you
here.
extend that zone over to the left that you already have marked off, there you go. So that's that weekly resistance, right? And then when you drop down to lower time frames, I'm going to annotate here real quick before you do that.
Yep.
But when you drop down to like the daily time frame, you start to see how price reacts into this area, right? It's not a lot of clean candles. You will see a lot of wick rejections. You'll see like some very low volume candles, but you also see how price comes right into that area so far this week. And we rejected that. We're holding on to a support here, right? So if there's going to be any clean buy opportunities, I think for like swing trades, right? Things that you can hold on to, it's going to be above this because after that, you have all this clean move right here to the left as well that you can mimic to come back and essentially even retest, let's say into 1640 or 1645 area, maybe even higher, depending on, how much of a corrective move do we need to set up for the fundamentals that are coming up to end off the year. And
Great
then
point.
drop down to the daily.
Yep. Yeah, you see price bouncing off that level right now.
Yeah, there you go. So when you look at the daily time frame here to the left, this is where you start to see those wick rejections and everything like that. Even for this candle, for us to continue back up bullish, we have to come back and hold on to a support here with a liquidity grab bottom wick. And that's how you really got the volume to continue pushing back up. This level here is also the resistance and then previous wick rejection supports. So you want to be very careful in this specific area that we're sitting in because that's liquidity right there. Right, so you could grab scalps and everything like that, but understand that in order for you to continue looking for those buys, you need to break above this.
Great point. Absolutely. So we're looking at that same level over here. It's marked off. We're about to approach it. And that's what those wicks are. Is that what you were talking about?
Yes.
Yeah, okay. So we could actually just get rid of this. And we can move this right here. And again, we're just kind of pushing up over here into that level. So zoomed in. Yeah, this looks like a nice, healthy 30-minute candle. So we'll see what we end up doing over here. This could have been your move as we passed the high right there, and you could have possibly missed it, but don't get too much FOMO because you could very well grab this instead if we don't get the pullback down here.
Right. And just from a technical perspective, like on lower time frames, we see these corrective moves. But once you hop up to the daily, we've just been in a massive sell-off ever since we rejected 1680. So from a technical perspective, the market has yet to grab some more orders. Either that's consolidation or that means some retracements. We could probably end up getting consolidation because this week we don't really have anything high impact coming out until Friday, which is PCE price index that would really cause gold to move, unless Powell or any other central bank official, FOMC members end up saying something that the market was not expecting, like complete blindsided or something like that.
Yeah.
But yeah, so I hope you guys have been able to understand what to expect in the coming week, even from a fundamental perspective, things to watch out for from a technical perspective. And as always, make sure you're managing your trade very well. It's one of those weeks where it's going to be very easy to get faked out. So make sure you're kind of using the higher time frames as confluence prior to looking for your entries.
Great points. Guys, if you have any questions at all, if you need help at all, just let us know. We'll be more than happy to help. But again, if you have any questions, just reach out to us. Have a great week. Be safe, be smart. No impatient trades, no FOMO trades, none of that. Just make it a point to stick to all your rules and stick to your plan, and that's it.
Absolutely. So do you want to trade Friday live?
Yeah, I was figuring that might be the smartest thing, trading Friday.
All right, awesome.
We
So
haven't
we'll see
gotten
you
that much
guys.
volatile Wednesdays, so I
Yeah.
think Thursday and Friday we've been pretty much sticking to.
All right, perfect. So we'll see you guys on Friday for PCE price index. Let's do it at 4:30 a.m. PST.
Sounds good.
All right, perfect. So an hour before news comes out. So as always, if you guys have any questions or anything like that, feel free to comment below or reach out to us if you need assistance in any way. On Instagram, mine's at SharmaFX. Stefanos is StefanosFX.
Have a great one, guys.